Good afternoon, everybody. It's a little bit after 5 o'clock on Monday, August 31st. We're going to talk stocks and options today, and we're going to run through all the stocks on the plug and play portfolio. So we're looking at 45 stocks, and we're going to chart some of them out. I'm going to talk about some of the price alerts that we have seen. If you are not following the price alerts on margin of safety investing, if that's where you are, take a look at the price alert section. So when you're at the main page, you see price alerts. Go ahead and click that, and you're going to see a button here. It's not on mine because you're going to follow me, but you'll see a follow button essentially, and you'll be able to follow all my price alerts, a number of which have been triggered recently. So you'll want these because when you get these trigger alerts, that's usually a good day to at least think about buying, depending on whether or not you have a position and the particular stock fits your risk parameters. DVAX, the one that we're sitting on, probably doesn't meet a lot of people's risk objectives, but a lot of these other ones do, such as Alta or AT&T or CenturyLink, maybe Cisco, although I'm a little worried about them. Kinder Morgan, I think, is worth buying. Nutrient is flirting around. It's bounced a little bit since being triggered, but may go back. Store Capital, and the dollar hit a point where it ran into support, and it actually is doing just a little bit better now. So follow along on the price alerts. And later on today, I will have the stocks of the week up with a lot of the charts here. This week, a little bit different format. I'm going to start by answering a couple of questions that were posted on the chat board. Somebody asked about Equity Residential, and I'm not particularly in love with this company. I do think residential real estate will be a little bit better than most other real estates when it comes to the REIT space. I think you're better off just buying an extra house if you really want to speculate on real estate. Seriously, because a second home, right, still qualifies at this point anyway for the break on capital gains taxes. So if you really want to get long real estate, I'd say be careful with the REITs. Some of them are really good, but in an environment where financing might not become as easy in the future as it has been, you may want to consider, well, maybe I'd just be better off taking 50 grand and going out and buying a second home and either Airbnb-ing it out if it's in a vacation area, or renting it out if you're not going to use it for yourself until retirement. Buying that second property in a retirement area or a vacation area really, I think, is one of the best investments that you can make if it's your second property. Once you get past 2 properties, you have to think about how your business structure will be. For example, if you want to own 10 properties and Airbnb them out until unless you're using it or until you use it. But that's a whole different business enterprise to be a landlord or a renting out multiple places. But a second property, I think, for real estate investing is probably your best bet. It is what I am looking at doing. We have a condo that's very affordable, and I think in the next year or two, we will buy either a property that we like to vacation in, and then we'll Airbnb it out the rest of the time, or B, a potential retirement property, or C, something that covers both of those ideas. I'm very possibly going to buy a property in Las Vegas. Not because I think climate change is going to be friendly to me, but because of the desert places to live. I think Vegas probably does better than probably anywhere else, probably better than Phoenix, probably better than any other places that you can find where it's too hot and too dry. At least Las Vegas has done a lot of the right things, and ultimately I think Las Vegas ends up handling online gaming for the United States largely, because I think there's going to be laws passed that allow online gaming to expand, and I think there's going to be a tie-in with land-based casinos as part of the law. so that these entities are regulated. That means Las Vegas probably does just fine financially. They've got expanding arts district. Technology is coming. It looks like they're getting better health care, and they've done the right things with water. So, I think there's a good possibility Las Vegas ends up being a place, because I like to go there for the poker, and I'm sure I'll do that until I'm dead. It could make sense for me to have a property there and just lock up the master bedroom with my desk and my bathroom, and rent out the rest of it, or Airbnb the rest of it. So those are the kind of ideas I have. I think you should explore those ideas for yourself when you think about real estate. When you take a look at the REITs, take a look at the long-term structure here on equity residential. Peaked here before the financial crisis and crashed, and then it's 4 times, I guess I missed an arrow, 4 times gone down to this level here, So it gets down to, for whatever reason, near the peak has been the support, right? So every time it gets back down to the 2007 peak, it pops back up, right? It doesn't stay down there very long. And certainly equity residential, I think, could run back up here to around, 80-ish or 90-ish, right in that range. But I think the risk, and people don't like to appreciate the risk, because, oh my God, that would mean that I was wrong, is that equity residential could certainly get down to this fib level right around 40. I think that is not an unlikely place to be. You see how it jitterbugged in here, dipped down, got back up, end of the financial crisis, came back. So even before the financial crisis was in full effect, it jitterbugged down, and then 2008 it went nuts. But I think this fib level is probably because you see the structural work that it put in right there. Could definitely get here on tighter credit, or having a hard time operating its business. Could it get down here again? Oh man, I think that now that we're in the age of monetary activism, and that while that will be controlled at a certain level, I don't think you're going to see the Fed just suddenly disappear. So I think that anytime there are significant liquidity issues where companies that are otherwise viable long-term have short-term problems, you probably always see the Fed step in when it's happening en masse. Now, if equity residential had just their own problems, the Fed's not going to care. But when the whole class is getting beat up, the Fed cares. I have not studied this company real in depth. It's something that's been on my list. It's just another REIT, and that is the way that I think about it, is just another REIT. I don't think there's anything special about it. I don't think the risk is huge here to 40-ish, but if it did get down to 40-ish, that means that it could be in a new trading range for a number of years. So I would, if I'm a dividend investor, because I don't think there's huge growth here, if I'm a dividend investor, I probably am very cautious about buying in, because I want to know that I'm not going to lose 25% of my money. So, if you're a dividend investor, you have to pay much more attention to risk factors, because, even at 6, 7, 8% dividends, whatever this one's at, that doesn't offset a 25% loss, right? So I would be very careful about saying, I like the dividend. And again, I don't even know what that is, because, if it goes down to this fib level, you're probably in trouble. Now, if it got into the low 40s, I think at that point, unless we're having a financial crisis, probably look real close at buying it. And in fact, I'll even draw, if I can find my rectangle, I would even draw a potential buy line from somewhere between 0.5 and the 0.618 is where I think you can buy this. So whatever that is, that's about 40. Ugh. Don't you hate when you do that with your charts? Yeah. I guess anywhere in the 40s, you could probably establish maybe a little position here then add to it down there. But if it breaks through this 0.5, something negative is probably going on, right? Because it hasn't got down there before. Probably the 0.618. If you really want to be careful about risk, I think equity residential you wouldn't buy until the low 40s. I'll mention that in the article. I've been getting asked about the oil pipelines. Hey, is this pipeline good or that pipeline good? Look, you have to distinguish between oil pipelines and gas pipelines. I'll write an article out titled "Why I Hate Oil Pipelines." Okay, just to make it real clear. And I'm actually going to title a lot of my articles "How to" and "Why" and what the market is missing in the future, just so people know basically what they're going to get ahead of time. I don't think the oil pipelines ever recover. I think that they are going to have permanent impairments. They're going to lose a lot of money from bankruptcies, and then the reset rates are not going to be as generous. So I think that Energy Transfer probably drifts down in the pattern over time. And remember, by the middle 2020s and late 2020s, oil demand is probably starting to really turn over. So there's just no positive catalysts for the oil pipelines. Same can be said of enterprise product partners. And in fact, I think they go back down to single digits by the middle to late decade. There's just no positive catalysts for these stocks. They just don't exist. The gas pipelines are different because the longevity for natural gas is much, much longer, right? We're going to use it for a lot longer than we use oil. And the demand for natural gas is actually still growing just a little bit, but the demand for oil may have actually peaked last year. We'll see. I think maybe, we touch oil demand highs again and break through by 1 million or 2 million barrels per day. But that'll be temporary. By 2025, this is all turning over because of the car rules. The car companies are telling us that they're going to produce EVs, and they're going to get the best mileage that they've ever gotten before. And I think ride sharing comes back. And in fact, I think you see the evolution of ride sharing really create some entrepreneurial business opportunities at the local level. So, I don't expect anything good to happen for the oil pipelines. I just don't. It's becoming more expensive for them. They can't rebuild cheaply if they can rebuild at all. There's just nothing to love about oil pipelines. All right, so let's take a look at some of our stocks that got triggered. So Store and Nutrien. So if you take a look at Store, triggered at 27. Holy cow. Do that's just right. I have to rewrite that. So Store dipped down into our buy zone. It was a $27 trigger. So we're at the very top of the buy zone for Store. I'm not real excited about it. Just here, I bought it a while back. I think that these 618 lines real close together are probably pretty good resistance. We've talked about the market being near the top of its rally. We saw that the market turned down today after the strong open. I really think that you could see Store Capital get back to this fib line, right? Just in the low 20s. If Store Capital gets to the low 20s, 21, 22, I really think you either need to sell puts or just buy the stock. This confluence, there's a couple lines right here. You could actually sell cash secured puts at about 25 with a $25 strike price, right? So if it gets down to 25, but there's downward momentum, but you just want to make a trade because you want to take in some income and you expect it to come back up, that would be fine too. So 25-ish for selling puts with a $25 strike price. Otherwise, wait till low 20s to buy it, kind of in this area. I can put in that second rectangle that I've been starting to add to different charts. This one I go with the orange line. Just there you go. I'm not gonna screw around changing the colors. The orange line should be enough for you. Good enough. So there we go. We got that one. And what else were we looking at? We're looking at Nutrien. Knucklehead. Extend. Now I have to come up with new defaults. Remember, this is a product of a merger. Potash Corp was up like way up at 100, and this is essentially that old stock. So if this dips back down to about this low 30s range, I think you probably got to buy it. There's not a ton of downside, right? Not a ton of downside from the buy zone. So we can add a extra rectangle here and say, you know, I really think you'd be fine buying it anywhere at the top of the buy zone. But just be cognizant of the fact that it can go lower because everything can go lower. And it's just the way that it is. I mean, this is a pretty incredible floor right here. I mean, if it got into the upper 20s again, back up the truck. All right, let's do a couple more here. If you have any questions, go ahead and put them up. Take a look at a couple more of the triggered ones. Kinder Morgan, CenturyLink, those got asked about last week. Kinder Morgan, CenturyLink, you know, go ahead and zippity do that here. Again, I think that you can just buy CenturyLink right now. I think it's hard not to. In fact, I think that I mean, basically in this area that it is right here, it's just hard not to buy, right? So it's just tough not to buy it right there. So I think you probably should just be buying CenturyLink and starting to collect your dividend. Same can be said for Kinder Morgan. Oh, look at that. Semi's right. Don't extend them left. You're killing me, Smalls. Okay. Make me feel a little bit better about the world here. So, I mean, if CenturyLink breaks down through this area, it just means there's something bad going on with the company. I think that this is actually one of those spots where you probably just got a lucky break for having an area to buy it in. Could it go down to really low single digits? I guess. If there's something inherently wrong with their business that I don't understand, it would have to be something really earth-moving, I think. But I think that CenturyLink, you can buy them right here. Excuse me, Kinder Morgan. Kinder Morgan is the pipelines, obviously. Natural gas, I just talked about enterprise and energy transfer, enterprise and energy transfer. So these guys, I mean, they're just so buyable right here. I know that there's nothing wrong with this business. You know, there's biases against anything fossil fuel, and then you have that group of Kinder Morgan investors who are like, I got kindered. Again, you know, I'm getting tired of doing that impression. This stock is going to break up, and it's going to climb this wall of worry, and then I think it's probably going to break out and get bought. Or it's going to get bought, you know, it's going to get up to about here because they know that this is resistance up here too, and then they'll sell the company. So from here, just not a whole lot of risk. There just really isn't. What other stocks do you want me to take a look at? Yeah, I mean, Kinder Morgan is a play on Buffett. I mean, I've been talking about the reasons why somebody would want to buy natural gas stocks and why there'd be strategic transactions. And then 2 years later, Buffett goes out and spends all $10 billion on natural gas pipelines. I don't know. I mean, I said it, and then he did it 2 years later. I think that means I was probably right. So, you know, it's just a matter of there's bias against the stock, but with a dividend so big and a strategic transaction likely and really no long-term negatives to the business model, I think you got to buy Kinder Morgan. So I'll just leave it at that. I've done interviews on it. I've written about it. I don't know how much more I can do. All right, so I wanted to show you. We'll start with the growth stocks. We won't. We're going to start with the dividend stocks. So this is from Stock Rover, and I added some things. You can see that the 10-day returns on most of these are negative to flat. Yeah, there's a couple of good ones. Store Capital's done all right, Starbucks, Qualcomm. And the yellow means these are stocks that I think that you can buy or sell cash secured puts on. Store and Raytheon are just at the edge of that. The purple means probably don't do anything with them. See how they're kind of more in the middle of their 52-week ranges. But Avco, Brookfield Renewable, I think you trim those if you own them, or sell covered calls if you have over 100 shares. Same thing with Home Depot and Illinois Tool Works. And I'll put these charts into the article. Nutrien, I just think it's a pretty easy stock to buy, and I think if it goes left, you buy more of it. Qualcomm, look where that is, 52-week high. These stocks after 52-week highs, to want to buy them, you have to believe that the stock market's going to break out again. Is the Fed going to pour that much more money back onto the market to have it break out again? Are they happy to keep their balance sheet flat and let the market chop? I think at a minimum, we're going to see market chop for the better part of the year, probably till Christmas. And there's a chance that we see the 2018 scenario that I've been talking about since last December. I really still think that the 2018 scenario is very in play for post-Labor Day, and I think you should be careful. When we take a look at the growth stocks, a whole lot more red, right? There's almost nothing to buy. I think you can buy Ford. I truly believe that that's the stock that's going to be the big winner as we move more towards EVs. I think the Mustang and the F-150, right? F-150, most popular truck in America. I think that's going to drive huge sales. And the fact that they are spinning off, they've already done a couple joint ventures, but they're going to be able to convert their ICE factories into something valuable. Whether that means that they do more medical equipment, or they do more aerospace equipment, or if they do different types of manufacturing with their robots in different joint ventures. Ford is in a pretty good position. They have to monetize some things, and they have to wipe out a whole bunch of expenses, which they're going to be able to do. And while I don't like to see American jobs lost or anyone's jobs lost in the world, Ford is going to basically, for every 3 people they get rid of, they'll hire back 2. Be my guess. I think they're probably going to reduce their workforce by about 1/3 over the next 5 years. Some of that will be outright firing, but some of that will be part of joint ventures where they just don't have to pay the full freight. So, I've really taken a look at a lot of that with Ford. The numbers make sense, and I think that they're going to be just fine. And in fact, I think this is a stock that once it catches fire, whenever that is, I think that they do their impression of Tesla. Maybe they don't go up 1,000,000%, maybe they only go up 1,000%. But I do think this is a stock that gets between 50 and 100 in the next 5, 6, 7, 8 years. And that's a pretty big jump from 682. Now, Dynavax has a technology that is, not super exciting, but, it's worked with a Hep B treatment. And then they are trying with several partnerships to try to get into the COVID market. Dynavax is on our speculative list, okay? It's a speculative stock. It is not something that you buy because you're like, oh, I'm going to hold this for 10 years. No. Dynavax is a lottery ticket, and you have to decide, do you want to buy any lottery tickets? The odds are you're going to lose on Dynavax, but the upside is crazy off the charts. So, they've got a base product, and they have some potential big things that could happen. The big things probably do not happen, okay? The big things probably do not happen. But if they do, it'll be to the moon. So that's what this is. Around $5 is $4, $5, $6 is what I suggested you should probably be buying it at. We have the, let's see here, Dynavax right here, below 7. It's been triggered. I think you can buy it if you like lottery tickets, but like anything else, like anything else, don't allocate a lot of money. See, none of that part of the chart. That part of the chart doesn't even matter. That company doesn't exist anymore. Well, I guess it did, but regardless, for our purposes, this is what matters. And I think that you can buy this stock down here if you like lottery tickets. That's the bottom line. So if somebody asked me why is this on the list, and I said, hey, it's on the speculative list. It's not even on one of the growth lists. It's on the spec list. People ask me for spec stocks, you know, things that can go up 10, 20, 30, 40, 50 fold, knowing that most of those end up being strikeouts. But this is one of them, right? It is tough to speculate in stocks with unknowns, just the way it is. But if you look back at all the stocks that were unknowns, I mean, just take Facebook, for example. If you could have invested in Facebook pre-IPO, way before it was super popular, you'd be super rich, right? And there's lots of companies out there where if you had invested pre-IPO or right around the IPO, or essentially to me, this is like an IPO again, this is a re-IPO as far as I'm concerned, because all this history of the stock is junk, decade of junk with that company. But now you take a look at it and you're like, man, if this thing runs, I mean, you know, to the moon. You know, they have to hit a home run, but, you know, it could happen. And it's not a high probability, so you don't want to spend any more than maybe 0.5% of your money on something like this. Maybe 1% if you're super aggressive. But yeah, it's just a spec stock is all it is. So let me take a couple questions. Yeah, you know, with SunPower, I think that you can do a number of things. Got that nifty software now that takes away all the dead air, so now I don't feel so much pressure. I can take my time, and then the recording will be rendered with the time taken out. So I think this straight up part of the chart, yeah, you gotta be a little afraid of. But I think that if you sell cash secured puts, $10 or $11 cash secured puts, and even if it goes down here, you know, you get your $1 or $2 and you have a net cost basis of, you know, 9 or 8 or something. I think probably wait until it gets back down to about $9 a share before you do much of anything. But I think right around $9 a share, I think not only is the stock a buy, I think you can sell cash secured puts, lots of things. I just think you got to be careful about all these parabolic up charts. Keep your shares of Maxion that you got in the spinoff last week. But I think you just really hold on to those because it's a small position. Manage your SunPower position. Hold on to the Maxion shares because if I'm reading it right, and it's tough because it's overseas, but I read about their cells, which got copper backing. Remember I told you zinc and copper are going to drive the next set of batteries and solar. I think that you hold on to those shares, keep a core position in SunPower, but SunPower is potentially, you know, a 10-bagger from here. So, you know, I don't think you have to be too cautious. I mean, you don't want to goof around. Oh my God, I bought some at $9 a share and it went to $6 or $5. Big deal. You buy more. I think that this is a stock that you can have a full position on plus trade around it. So if you want to have 4% of your money in this and then trade, you know, some options around it to boot, you know, really having 6 or 8% of your money, you know, in this, you know, for hot minutes, I I think this is a stock that you can do that with. I think this is a stock that's got a ton of upside, very little downside, huge financial backing, right? Total. I mean, you don't get a lot of stocks like this with so much upside that have such a super rich pocketbook. And that's what SunPower is. I think that we're going to get a opportunity with Taiwan Semiconductor, TSX, TS, what the heck is it? TSM. Yeah, that's close. And I don't have I charted this. I have charted this one out. I gotta change my defaults. All right, let's change my defaults right here because it's driving me nuts. All right, and we're back. Again, another one of these parabolic charts. Did a 168 line, right? 1618 line. It's pretty strong. Resistance is jitterbugging around there. I bet it comes all the way back down here to around 60. At around 60, I think you really have to take a look at it. Somebody mentioned that, yeah, you know, China's posturing with Taiwan. I will tell you, I think that Taiwan is going to be where the United States holds the line on China. I don't think there's anything we can do about Hong Kong. It's, you know, basically on the mainland. Taiwan's an island. I would not think it's unlikely that we back their play for independence and we just park a carrier group on the island. There's nothing China can do about that. I mean, they're certainly not going to attack us over Taiwan. I just don't see it. Just like I don't think there's anything we really can do about Hong Kong. And I think that what's going on right now on the macro level is you have a trade going on. Taiwan is going to fall under the United States sphere of influence, and Hong Kong is going to fall under China's sphere of influence. And with Trump doesn't matter, Biden doesn't matter, Biden will matter, I think. But the diplomats and the people who can wait 4 more years, if the case might, you know, be, you know, if Trump wins, you know, then the rest of the world just waits him out for 4 years. He's a lame duck pretty quickly. So, you know, I just think that you're going to see Taiwan fall under the United States sphere of influence. So I think that any digger that Taiwan Semiconductor takes, just because they're such a good company, is an opportunity to buy something. I mean, if we could get it down around this line, right around 50, boy, that would be outstanding, right? Wouldn't you just love that? So if we can get Taiwan Semiconductor, you know, down here, back where it was in March, get one more shot at the apple, you know, we have to take it. Because this area here, I mean, that's just, yeah. We should have bought that. If we get another chance, we have to do it. You know, I have Berkshire Hathaway on the ETF list. Why do I have it on the ETF list, people ask? And it's because it's so diversified, right? It's more of a fund for you when you take a look at your asset allocation. You know, I don't even know if it makes sense to bother with any of this stuff down here, but you know, we'll put it on there. I think that if you can get Berkshire Hathaway, what is going on here? There we go. I think that you have to take it. Again, this area here, probably the bottom. I don't think you can get a chance below about 160. He buys stock. Apparently they bought stock when it was in the 180s. So I just don't know. I mean, I think you probably can almost bump this up to here. I guess maybe we can leave it here in case there's a financial crisis. I don't know what happened to TradingView. They must have updated something because all my charts got screwed up. Yeah, I don't even know if I need a second box there. I just, if Berkshire Hathaway gets under 185, I just think you have to buy it. I think you put it on the ETF part of your asset allocation, not the stock side, right? Because this is diversified like a fund. And it should not go unnoticed that Warren Buffett bought a gas pipeline because it was cheap, and then he invested $6 billion out of the country. You know, he built himself his own ETF of Japanese trading houses. So it's interesting that he's basically saying, I don't see any value in the United States, but I can look around the world and see some things, right? So that's also kind of, I have to study it more. I don't know how those Japanese trading firms, brokerages, whatever they are, I don't know how they're impacted by currency fluctuation. So that's actually the part that really was interesting to me, is what are the implications on fluctuations. But I do think Berkshire Hathaway, I think it's a better version of the S&P 500. It's basically the same upside as the S&P 500, maybe a shade more, but with less risk, right? Because he can always just buy back his stock. The S&P 500 can't buy back its stock. So if you want to be partially indexed, buy Berkshire Hathaway. It's a better basket of companies than the S&P 500. I talked about the Fed on Friday, so listen to the Friday webinar. It got messed up in processing, and then I fixed it, so it is up now on the YouTube page. So if you want to take a look at and hear about the Fed, right here, the Maximum Investor Optimism webinar from Friday. I actually think that this is a pretty important webinar. When you take a look at what happened in the stock market today, that was not a good looking stock market today. NASDAQ went up again, but Dow Jones and S&P 500 slipped, which goes to the bifurcation that I've been talking about for, right, just a long time. We'll see here. So AT&T is reportedly selling DirecTV. I don't know about the $20 billion number. That's half of what they paid for it. But it looks like they are going to sell it. I don't know what the number is, so we'll take a look at that. But again, remember, this is just them getting rid of some baggage. When they sell Warner Brothers, and they will, and I think it's going to be Apple that buys it. I guess Google could too, but it just makes so much sense that AT&T would do some sort of deal with Apple, where Apple got like exclusive rights to market Apple iPhones and product launches, like for a week of exclusivity every time they did it, right? And a long-term contract, and maybe the Apple stores get moved into the AT&T stores. I mean, there's a lot of things that AT&T and Apple could collaborate on, and Warner Brothers is just one of those things where, let's say that they get $20 billion for DirecTV. Again, I don't know if that's what the deal is talking about, but these guys, Johnny come latelys. Take a look at some of the things I've said in the last few years, and then they come true. It's because I know these companies. If I bother with them, I know them inside and out. And I don't publish all of my research. I'll tell you in these webinars, but a lot of my research is, I give you the brief version, because I'm not going to show my work in a way that lets guys like this rip me off. Because I'm not saying that this guy would, but I have been getting ripped off for a decade. I mean, Motley Fool ripped me off. And I'm just not going to go down that road again. So there is like a 1% element of faith that you have to have sometimes that I did the work. But even if I showed you the math, are you going to look at it? I mean, if you can't read a 10K's math, you're not going to, you're going to look at my stuff and say, I don't know what the hell he's talking about. I look at it once in a while. I'm like, what the hell am I talking about? So, but if they're going to get a big hunk of cash for DirecTV, and then just imagine how much money can drop to the bottom line, and what kind of strategic deal they can work out on some sort of distribution rights with Warner Brothers. Oh, good grief. AT&T is going to break out of that range that I talked about. At some point, why is there two of those? Oh, whatever. I still think AT&T breaks out into a new range, and we see it ugh. I think AT&T goes all the way up to around 60 in the next several years. I think it breaks out of this range. I think it breaks past here, right? It goes to the top side of this line. So if I had to project AT&T, I would say doink, 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 doink. I think that it's going to head on up. No, I don't even know if it stops there. Let's see, where's a good line? And I could get all the way up to here, come back down, could probably go all the way up to here because that looks like a spot where it break out, come back down, they get all the way back up. Let's just go to that one, right? It could definitely do a step ladder like this. Once it breaks through here, that's it, man. It's racing. So, but even the climb from 30 to 40, while you're collecting such a big fat dividend, right? Even if that takes 5 years, you've made 1.5 times your money. So that's a pretty good deal. So, but I think it's going to go up here. You know, when it gets 60-ish, we really are going to have to reevaluate based on what's happened during that time frame. Did they sell Warner Brothers? I mean, I do think they have to sell Warner Brothers to break out. Otherwise, I think it's just going to the top of the range. So if it gets up into this area, and they haven't sold Warner Brothers and doesn't seem like they're going to, you know, then we probably take profits or sell covered calls or something. All right, I think that is it for tonight. I will throw it on the condenser machine and get rid of the dead air, and it should be down to about a 30-minute video. So I hope you've noticed that the last couple of videos have been shorter because I've been sucking out the dead air. And of course, if you play them at 1.25 speed, there you go. All right, have a good night, and I will post a couple of articles tonight as I play poker.